Ready to get the inside scoop on equity funding? Tune into TDJ Equity Funding Insiders Podcast for an in-depth look at what it takes to access financial capital and maximize your investments. Hear from experienced professionals, including bankers, underwriters, loan officers, and industry experts as they share their unfiltered stories and valuable lessons on securing funds.
Welcome to our show today. Thank you all for coming in, and we are very excited for having you today. Today, we're going to talk about something that's different than what we've talked to before. As a loan broker, you all know that I deal with different lenders and I also deal with different types of business. What we found out that one thing that has been a problem is that people are not aware what's available for them in business, basically. So what we want to do with our podcast, and this show is one of the main ones, is to bring you another type of lending that's not well known. A lot of people don't know, not because it's not good, but it's just the fact is you only hear what you hear. That's it. So we're coming to bring you the top types of lenders that's out there that business are using. And one of them that we haven't, that's our guest that's come today, is dealing with what we call it receivable factoring, but you all may know it as like financing your invoices or your purchase orders. So that's basically what this is about. This topic, this show that we're talking about today is dealing with invoices as far as you are selling your invoices, how that works, and to give you some kind of idea. So that's what we have going on today. And so the guest that we have today is Mr. Brad Garny. Now, let me tell you about Brad. Brad has been around for a long time. But I'm saying that with education and knowledge. I've spoken with Brad on other occasions, and he knows how the invoicing business should go and have gone. He has over 40 years of experience. So guess what that means that we having today? We're going to get fed today by Mr. Brad about the invoicing field for you selling those and how you get funded with those, how you get money from those. So that's what we plan today. So what I want to do, if you all help me to welcome our guest today is Brad Garny. We want to welcome you to our show, first of all.
Thank you, Jackie. Thank you for inviting me. And I thank you for how you're helping the business community to learn about different options in the lending world and to make what can be a complicated, hard to understand process easy to understand, and you help these companies to get funded.
Exactly, and you're right, and that leads into the next question I got. First of all, like I say, you are definitely welcome to be here, but knowing what you know, and you just talked about helping businesses, and you've done it way longer than I have, for sure. So in the process of helping them, before we go into, let's talk about, first of all, the funding from when it was to what it is now. What are you seeing? First of all, let's talk on that. At the same time, explain a little bit more about the invoicing and how that works in that era as well, if you could.
So how invoice or receivable factoring works is one of the simpler forms of financing. My clients will provide their product or service, bill their customer. So, it's just another day at the office, right? Mm-hmm. Then when they need the money, they sell me that invoice. Okay. So if they provided their product to Texas Instruments. Mm-hmm. Texas Instruments said, thanks for the box of parts. We'll pay you in 45 days. Okay. My client needs some money before 45 days. They got to buy inventory. They got to make payroll. They sell me that invoice. I'm going to give them 95 cents on the dollar the day they sell it to me. I'm then going to wait for Texas Instruments to pay us. When we get paid, we'll take the 5-10% that we held back, take our fee out of that, and then return the difference. Mm-hmm. But our client's getting plenty of money up front on day one so they can do what they need, pay all their operating costs, right, stay current, and get another job out the door. Right. So it's a straightforward, selling an invoice. My clients sell the invoices they need to when they need to. So they're not under a contract to sell all their invoices, or that they have to generate so much money for me, revenue a year or something. I want my clients to grow. And if they grow, they generally need to factor more. So we're there to help them grow.
Okay.
And now and that part hasn't changed in our last 45 years. What has changed is we started our business with a check ledger, manual posting cards,
rotary telephone, rotary telephone, tomato soup cans, right? Yes,
but I'm still qualified with smoke signals. So, but these ledger cards, we were supposed to add them up, and they were supposed to balance. And goodness,
manual, yeah.
I enjoyed the marketing and sales part, but the account. Oh, I should have paid attention in accounting. Just a fax machine was a big deal back then,
right?
And now, of course, we're working with our software provider to make sure our client portal is just as intuitive as your Apple phone, right?
And user friendly, and
That's
we just have to learn. Look, blockchain, all this technology out here. We have to know all that stuff.
And we got our software developer. They have that expertise, and as we bring a new client on board, we say, you're going to love our portal. Your accountant's going to love the portal. You'll get all your information here. Let me train you. Oh, we were already on the portal. We don't need to waste our time getting trained.
Look at that.
So it is intuitive.
So it's a lot more easier, as what you're saying, to actually get your funding. Now, I think let's talk about the time. Is it quicker? Is it longer?
It's probably quicker in that our client. When we started, I've used Texas Instruments. Thank God for them, because 40 years ago, we opened an office 2 blocks from Texas Instruments at Central and LBJ. And we wanted to be close to them because all our clients were dropping off parts.
Right.
And printing and supplying warehouse people. And they had to physically bring paperwork to my office.
That's why you had to be closer.
We wanted to be close.
Wow.
And so they were dropping off parts. Then they'd come to our office, get a cup of coffee, get a donut, would make phone calls, would get everything situated. Right. And then maybe in a day or two, we'd be able to cut a check.
Wow.
And so now my client downloads downloads their information. There's no paperwork.
You don't even have to see them to go in and just initially put your first pre-application.
And everything's
streamlined,
downloaded, and I look and I see, that's there. Yep. That's great. Let's buy that invoice. Let's wire the money, and
that's it.
Yeah.
And what's the time frame on that? Probably what?
So
turnaround time, probably like what?
It can be a matter of hours.
What? Hours. It could be.
Oh, sure.
And see, that's different than what we have heard of long time ago, how long stuff take. And there are some, and I want our listeners now, listen to what he's saying. He's saying you may be hours or maybe days. But compared to a term loan and a bank loan, it's a lot shorter. Is what we're saying time-wise. Yeah. So see, that's an option, guys. Yeah. Remember, we talk options, not alternatives, but options that you have out here that you're not aware.
And as an option, one of our advantages is we can move very quickly.
Okay.
My partner and I will move very quickly.
Okay.
People aren't contacting us because they might need money next month or two. They are in a bind right now. They have an opportunity right now. They need cash.
Right.
Now. That's why they're calling me. We understand that.
Okay.
And if I am a solution to their problem, I'm going to fund them quickly.
Right, quickly. Now, this is what I want to say from the loan broker side so you guys can know what he's saying. That one thing that sticks out, I think, with you all is that You want to know, okay, what qualifies me to even get this loan? So we do want to mention the qualification, if I'm right, and Brad, you can correct me, is based on their vendor, the one
Their
that
customer.
invoice, their customer that they're sending in to you. So let's talk on that. So tell me how it works.
Yeah. So as I buy that invoice, I'm not expecting my client to pay me back.
Okay.
They provided that product, that service to their customer. Their customer is going to pay that invoice, right?
Mm-hmm.
So I run credit. So it's the customer who's going to pay me. So I'll run credit reports on their customer. Are they billing TI? Are they billing the school district? Are they billing a hospital? Or are they billing the city of Dallas?
Yeah.
So if that customer is creditworthy,
Gotcha.
that's what I'm looking for.
Okay.
And if my client was billing a commercial moving company today, it was a $6,000 bill.
Mm-hmm.
Well, that commercial moving company has to have a credit report where they've paid $6,000 bills before, right?
Right.
Now, I wouldn't buy $6 million to that company, but my client's doing $6,000. Right. It's a perfect fit.
Right, for you to do. And I like that, because that's what I said. We need to see what the options are, because also with you guys, that's good. And tell me, correct me if I'm wrong. What about, like, say for instance, contracts? If a person has a contract with the government.
Yeah, and so the contracts, it's going to work the same way.
Okay.
In that factors, by definition, are buying the invoice.
Okay.
They're buying the billing for something that's been delivered, something that is the service was provided.
Okay.
So if you have the contract to mow up and down the highway, I can't help you buy tractors.
Right. Okay.
But if you can mow for 1 week,
okay,
and build a highway for $10,000 worth of mowing,
got you.
Then you don't have to wait the 30, 40 days, 50 days for the government to pay.
Right. So basically what we're saying, again, people, an option. A lot of some people are trying to get into the contractual business with the government. We get a lot of that. Our women are trying to, minorities are, and we get that. But what do you do when you get that contract? Because you need money, because they're not paying you necessarily up front. That's what you have to realize when you get a contract. Most time you're not paid any money up front.
No, you're paid at the end.
Right, and that's where you come in.
Yeah.
Okay. At TDJ Equity Funding, we understand the challenges you face. Whether you're expanding your business, investing in real estate, or launching a startup, we've got your back. Our expert team of loan brokers is dedicated to helping you secure the funding you need, hassle-free. Imagine a future where your business thrives, where opportunities are endless and working capital has made a great difference in your business. TDJ Equity Funding can make it happen. Booking an appointment with us is easy as pie. Just visit our website at www.tdjequityllc.net and take the first step towards your financial success. Don't let your dreams gather dust on the shelf. Seize the opportunity today. Visit www.tdjequityllc.net and schedule your appointment with TDJ Equity Funding. Let's turn your dreams into dollars.
Welcome to Frameworks Consortium, your partner for sustainable business success. Frameworks Consortium is your strategic guide, providing you with clear, actionable roadmaps to achieve your business goals. Our team of seasoned strategists provides expert guidance, ensuring you make informed decisions with clarity and confidence. We develop customized solutions that align with your unique business objectives, fostering growth and resilience in an ever-changing business environment. Connect with us today and harness the power of strategic planning for your business.
Now, let me ask you about the company that you're getting the invoice from, but that's actually... what is your customer? Wouldn't they be their customer?
So we call them our client is who I'm going to fund.
The business owner.
Yes, the business owner is my client.
Okay.
And I buy the invoice to their customer.
Okay.
And then what's the thing we're talking about? So my client, and a lot of my clients are going to be in the startup phase.
Right, that's what I was going to ask you.
And then also we've had clients as entrepreneurs. You run into an entrepreneur who's put too much money in their business. Maybe their last business didn't work out so well, and so the entrepreneur has a rough credit report.
Okay.
That's okay for me.
See?
That's okay for me. We're not focused on their personal credit report. We're not their personal credit score. I'm not going to tell you how low I go because nobody will believe me.
Right.
Because if they're providing a window washing service to the Federal Reserve building on Pearl Street, I know the Federal Reserve can just print up money, right?
Yes, sir.
I guess we're not supposed to start down that.
We'll do that for the next one. Okay.
Yeah. Okay. So my client, they might have had something. Their credit score might be very low.
Right.
They're going to get paid by the Federal Reserve. They've cleaned the windows.
Right.
So
that's a great situation.
Yeah.
That's what it is. So now let me show you what we just incited to. You can have a business, your credit may not be as good, but you have a lot of great client invoice clients is what you have. Now you have another opportunity to get some type of money because you can sell them and therefore you can get that money to continue your business.
Happiness is positive cash flow, Jackie.
Exactly. And that's how that works. So that's what we're going to talk on. And we got more stuff that I'm going to go through with this. I just want to kind of at this point make a comment and note to you all of how important it is for you as business owners to learn your options. Because when you are slammed in that one situation or you believe your banker is the only way you can get money, it locks you in and it doesn't free you up. And then just like, it was a saying that I had heard from a guy that said, you have to free yourself, from certain things that stop you from growing. And lack of knowledge is one. Another one is free yourself without actually freeing yourself. But you should notice when the time you actually imprison yourself, that you can see you imprisoning yourself. And lack of knowledge and knowing what else is out there is definitely what's happening with business owners. That's why we're here. That's why he's here. Because now you have an opportunity that if you get when you get these contracts, because if they can still just submit it to us, right? And you can look and let us know how much you can do of it, right? Is it
yes.
Right, because I noticed you said, we might not do all of it, but we can do parts of it.
Yeah, and we'll work with our clients.
Okay.
And as we get credit information in on their customer, we keep our client informed. Hey, Macy's is showing a lot of struggling signs. You got that shipment of dresses, maybe you can ship them to Ross Dress for less instead of Macy's.
Right.
Because who wants to ship out those dresses not knowing if you're going to get paid?
Okay, so you're saying you kind of stay on top of monitoring what's going on with the vendors as well. And that's why, now let's understand. Now, Mr. Brad is actually saying that it's a certain caliber that he's only going to work with. I do have other factors, like say, there's other factors out there. Like we talked about construction. So you don't do construction, but
there's factors who specialize in that.
So they need to know that. So do you know the different type? Can you name some different types of factors? Like I know construction because you and I talked about because I asked you about it. You was like, no, we don't do that.
So the classic factoring is the category of my company's going to fall in where we're providing our service to the staffing companies, the manufacturers, service companies, oil field service. The other two major categories of factors, one's going to be healthcare factors where a clinic, a hospital is billing insurance, Medicare, Medicaid.
Gotcha.
That, of course, is going to be very specialized billing.
Yeah, understand.
And then construction factoring
is another one.
Is the other. There's just a level of construction laws out there. There's a level of laws out there about when you can bill, when a payment has to be made, when a late payment can be bonded, and if you're going to get into that kind of factoring, you really have to specialize in that because
it's more detailing. You're right. When you mentioned contract, I know that from having experience with working with them you're right because you got that payment, that contract, that subcontract.
And then subcontractors, there's laws about them being paid. There's laws about inventory being paid and supply. So
They need to be special. It's specialized. Yeah. Okay, so that's good. So we're basically saying the 3 types of categories you're talking about that's majorly about is the I guess the admin, pretty much factoring, administration, like you said, sales, retail, all that retail type, right? If we want to call that, and then you have the healthcare, and then we have the construction. Is that right? Or what should we name?
So I'll call it classic factoring.
Okay.
Traditional factoring.
Okay.
In the 1950s, 1960s in America had a lot of furniture manufacturers. America had a lot of carpeting manufacturers, and those industries were all factoring, all the little furniture shop, big furniture, and so that really was where factoring is going back to the Mayflower. There was factories that helped finance the Mayflower. So it's a very old form of financing, but it really grew in the 1950s, 1960s in Chicago, New York, to finance these industries.
So let me ask you this: since you said this, because I can see there's a lot going on there, it's not as much of it going on now. You think?
Oh, it's grown.
It's grown. That's what I'm saying.
So those industries, yes. So there's probably not as many furniture manufacturers in America, but there's still all sorts of lots of manufacturing is coming back to America. We're getting a chance to work with some of those companies. Staffing, there is a huge part of our economy, and that includes, it could be healthcare staffing, warehouse staffing, IT staffing, the outsourcing. Companies will use outsourcing to hire receptionists, to hire people to work on a project for 6 months, and then they know that project's going to wind down, so they outsource it. Those are all companies that have just got a profitable contract, and they've got 5 people who can go work for Amazon, but now they got to make payroll, and Amazon's not going to pay them for 45 days.
I see that you can step in and help.
So it's I forget how many billions, just a huge number that was factored in America last year.
Wow. So nothing has changed on factoring. It's just being aware that it's available and matching up the industry with the client, customer, right?
Yes.
Is what we need to do to match that up. But see, that gives us, our business owners, another way of getting money. And that's why we include that in our stacks of what we do. So we're found out that
great option.
It is wonderful because, like you said, it's not based on their credit as much, but it's like some clients, even though their credit is great, they still can't walk away with a $500,000 loan, just uncollateralized. So they we have used you guys because you came in really good at that point to work. Factoring worked wonderful for him.
And as our economy goes through cycles, go through changes, with today's economy, the banks, some banks had challenges last year. The banks are at this point going to be more cautious with their commercial lending.
They are.
They're going to be more cautious. If you walk in with accounts receivable, maybe 3-4 years ago, maybe the bank might have had an appetite. Right now, they're going to be more cautious. The interest rates are higher. The banks are cautious, and yet the economy's strong, and a lot of startups are getting these new contracts.
Right.
How are they going to fund it?
Exactly. And that's why we wanted to have you on to actually talk about the factoring or the invoice buying, is what you said. Invoice buying. So our clients, our customers, listeners can know what's the option and what is out there, because we're talking just about one of many. And that's what happens with us when we're in business. We only know about 1 or 2 things. And so you have to understand at some point, lack of knowledge will affect your business. So we're trying to involve and have people here that can talk about all the different options. This is wonderful for a lot of people that's actually looking at doing contracts for the government, because I actually have some people that come in and say, I want to start my own company. You know, the first thing we ask them, okay, well, how much money you have to get started? And we say that because we have a business development side as well. So when they come talking about money, we have to ask certain questions. And what we realize is that business owners don't realize all the options they have. And factoring, receivable factoring is a wonderful option for business owners to utilize. So I guess it's best to reach out, find out what all can be done and how we would actually do it, right? What other suggestions you have?
So of course, working with you.
Okay.
Of course, and as we talk to a prospect on the phone, we're finding out who their customers are. What business they have. Are they a drywall contractor, or are they a security guard company?
Right.
So I want to make sure it's an industry I'm comfortable with. And then how much are you billing out? I'm billing out $2,000 a month. You know, I know a factor who loves smaller volumes.
Right.
Well, I'm billing out $20 million a month. You know, I know a factor who likes bigger volumes.
Right. So either way.
Yeah. So I guess am I Goldilocks? Is she the one who gets the bed just right?
Yeah. So you
see, it's been a long time since I've read the stories.
Right. You and me. So yes.
So so we will work with the prospect and try to qualify them very quickly.
Okay.
That's something we're interested in, and then if you got a good factoring deal, but here's a company that would fit your needs better.
Okay.
Be happy to give them that referral, because we have a 5-star Google rating. We've been top rated because over our 45 years we've learned, let's stick to what we're good at.
Right, and that's what
And if it's too this, too much that, no.
And that's what makes you guys a perfect fit for certain businesses. So listeners, if your business is based on invoices, you have a lot of invoices that you get paid off of, okay? So you have businesses that you get paid off of, then you want to actually look at factoring. Also, if you have a bigger vendor client because we call them vendors, but if you have a vendor that is big enough for his money-wise that creditworthy is really good, I mean, you really want to consider factoring that invoice. And I know sometimes we may think, well, like Texas Instrument, for example, we can, you know, we're going to pay, so I'm just going to wait. But let me tell you what happens in business. That's fine if it's a personal thing. But when you're in business, payroll comes up. Problems come up. Mechanical.
Problems take money.
Problems take money. When you start talking about actually business and you look at the options, one thing about business owners try to do is think, oh, I can do it or I don't need it. I need you all to really think. Why would you go through that when all you have to do is reach out and contact someone that can show you what's available for you? You either can take it or you don't, but at least you'll know you have options.
Have the option. And again, we don't require our clients to factor all their invoices or to factor any of their invoices.
Right.
If we had a company that was delivering, manufacturing and delivering patio furniture to Home Depot. And he thought, okay, I'm going to get you in place. I want you to get me qualified. Let's get all the paperwork done. Let's get it. I don't think I'm going to need you for 6 months, maybe a year. But he had the foresight to know that Home Depot could turn that dial just a little bit and he would be snowed under.
Oh, true. Oh my goodness, that is so true. So you need to, and
so he had the foresight,
right.
and so good for him. And within a month, he came to us and said,
"I need the money.
We're in business. It's, okay, I'll buy you lunch, Brad." And I was like, "No, I'll buy lunch." But
and that's what we're doing. We're trying to teach people in our courses that you need to have yourself set up for the money before you need the money.
Jackie, it's so much easier to get this in place before you need it. It's so much easier to qualify.
Yes.
Before
you need it.
Before you've taken your last penny out of your IRA, buried in your business, and it's gone.
Now that is true. Let's stop. I want to emphasize on that. I've had it happen so many times. When you reach out to us as a loan broker, or you reach out to Brad and them, by the time you reach out to them, you've either ate up your credit, like you said, or you've taken everything out of your retirement, all of your savings, you've used all that, and now you come looking for us. Come before that time. That's what when you have that money there, then come with us.
We understand. This is my company. I've put my money in my company. Mm-hmm. So I understand that you're going to fund your baby, but I could only put so much of my money in. We had to get other resources.
Right.
And I'm glad that we're explaining this option.
Yes, I am. We need to have it. So I do want you all, anything you want to say to our listeners to let them know, any call or action you want them to do at this point.
I love how you've explained that we're focused on the credit strength of the vendor, the customer, and the flexibility we try to offer, that we do offer our clients, so that we're there to help them grow. We do get clients who have to put out a fire.
Right.
They're behind on payroll. They're behind on, and
right.
You can't be there very long. But that's the business world, and things happen. So if it's a strong situation, if we can get our hands around it, then let's get the fire out and let's go forward. Some people have also said, well, gee, factoring's expensive. Okay. Well, what's the value of factoring? We did sign up a client years ago, and he was a high-paid software engineer. Mm-hmm. He was just billing a company for his hours worked. I think we were factoring his payroll. I kept asking him about it. He goes, no, I want to do this. Mm-hmm. He never grew. He never hired another person. He never grew. Mm-hmm. I was like, at the end of the year, I was like, well, why are you giving me a fee and you're not? Yeah. I don't know what the value was to him.
Right.
But we signed up a machine shop out in Kaufman, Texas. He was billing several different oil companies about $50,000 a month in little whatever they used on the pump jacks. Mm-hmm. When he sold his company, he was billing out a little over $3 million a month. Mm. Now providing hardware to the hospitality industry, to hotels. Mm. And to get from $50,000 a month to $3 million a month, it took a lot of money. And he made a lot of money. He paid us an expense, mm-hmm. but he wouldn't have grown, and he wouldn't have made all the extra money. So it takes money to make money.
Right. And we have to understand that this is not personal, it's business. You have to understand that. That's why it's so important to be aware of receivable factoring in your profile of lending / financing, money, working capital opportunities.
Working capital.
You have to keep the factoring. I believe factoring is one of the major ones we like, and we like to use for certain clients. And I think, like I said, people need to be aware that it's out here and that it's available and everything for you as well, okay? So we're going to get ready to wrap this up. I do want to thank you, and I appreciate you so much for being here.
Jackie, you made this very enjoyable, and I've learned better how to explain factoring. Thank you.
From our little thank you for our conversations. I appreciate you. And I want to thank our listeners. I appreciate you all so much. The feedback we're getting, the comments we're getting, and I just thank you. So let us know what we're doing, and our lenders coming out professional lenders. They actually come out, they're in the industry. When I say professional, I mean they're professionals in the industry. They're in the finance industry, and they're coming out and they're giving you guys their insight and their knowledge. And I appreciate you all thanking us, and you're glad that we have there. If you want to be aware of everything we got going on, listeners, for us, our podcast, you can listen to us on all the platforms, all over the major platforms. We're on those, so you can listen to us on those, as well as we would love for you guys to be part of our Funders Insiders community. We do have that where you can go sign up at TDJ Equity LLC.net/podcast. We want you to sign up because from there, we're actually educating people more through our mailing, and also giving you some PDFs. We're giving you some documents. We're trying to give you guys a lot of stuff that can kind of guide you on the lending road of the proper way of how you should be set up to be fundable. Okay. So again, I want to thank you guys for being part of our show. And until next time, take care and thank you.
We hope you enjoyed this episode of TDJ Equity Funding Insiders Podcast. If you'd like to be a guest or get in touch with us, please visit our website at tdjequityllc.net/podcast or email us at podcast@tdjequityfundinginsiders.net. Until next time, take care.